But from here on, what's the likely trajectory?
Morning, Anuj. Yes, it has been a relative outperformer compared to the other currencies. In fact, at this stage, the rupee is over 17% overvalued compared to the RER. From here, the trajectory looks like one of slow depreciation of the rupee on account of two counts. One, as I mentioned, from an RER perspective, there is room for the rupee to correct. We clearly are overvalued now, and it's not a healthy sign for the Indian economy. And second, I think there is an overhang of unhedged foreign currency exposures in the country, which have been built up since 2014 in the form of people taking foreign currency debt which has not been hedged, portfolio flows which have not been hedged, exporters who have extended their hedges, and importers who have underhedged. So I think given the combination of the two and the fact that we still think the global dollar strength story has some legs to it, we expect gentle depreciation of the rupee, nothing dramatic. But through the course of this year, 70 should be seen.
Okay. Good morning, Ananth. Always good to have you with us. Well, actually, it was the Trump statement which kind of shook the markets yesterday. Trump almost trying to shout down the dollar. Is that going to be, should we look at it as a change in US government policy? Can really the dollar be amenable to policy?
That's a great question, Lata. Look, there are two parts to it. One is what do the fundamentals indicate? And second is what can people engineer? On a fundamental basis, I think there is a lot of justification for the strong dollar story. Clearly, the US is looking a lot better than its global counterparts in China or in Europe or in Japan. You know, we are seeing close to full employment in the US. We are seeing inflation tick up, as we saw from the CPI data this week. And besides that, we're also seeing a lot of capacity within the US households and US corporates to actually spend and invest. US household debt is now below 80% of GDP, and at one point it was at close to 100% of GDP. Likewise, US corporates are sitting on piles of cash. So the capacity to spend is definitely there. Contrast that with China and Europe. While recent data has been heartening, clearly there are vulnerabilities in these two large blocks. Chinese banking debt is still a worry. Europe, while recent data has been positive, there's so much of divergence between individual European countries. And there are existential questions about institutions in Europe, including the currency, including the political status there. So given all of that, there is legs to the US stronger story. Having said that, lots of things could play out through the course of the year. Clearly, Trump is in the camp of, weakening the dollar and using that as some kind of a lever for improving the trade balance for the currency. Now, can he really engineer that by way of statements? I don't know. I would think the fundamentals would prevail. If he does go down the path of fiscal spending and, revving up the US economy and doing a reflation of the economy, that would actually mean higher inflation in the US, and therefore Yellen would then proceed towards higher rate hikes or faster rate hikes in the US. All this still gives a lot of credence to the dollar's strength story. The only caveat I would add is that the whole world seems to have the same view at this point in time, which is why you do see, the direction of pain seems to be whenever dollar weakens, and you see everybody sort of heaving a collective sigh of disbelief. So at the moment, fundamentals point towards a stronger dollar. The problem is positioning. I think everybody's positioned the same way, which is why you might need the positions to cough out first before the trajectory of stronger dollar continues.
Okay, fair point. So you can see a sub-$100 index anytime soon?
Yeah, absolutely. Look, even the bounce that we saw today on the back of Janet Yellen's statements don't look completely convincing. It's gone up to beyond 101 right now. It doesn't look entirely convincing. It's quite possible that we bounce back down again. But I do think eventually dollar index through the course of the year has a very strong story to head back towards 105 or maybe even higher levels. Okay.
A final quick question on bond markets. We saw US yields as well jump after the Yellen testimony, and now once again 2.45 or thereabouts on the 10-year. Our yields have gone up too in sympathy. What's the story for our yields? Are we, condemned to be in between 6.4 and 6.5? What's the direction for the quarter, say, up until March 31?
Sure. Look, when it comes to domestic monetary policy, clearly there is some room for rate cuts in the short term, or maybe even over the medium term. In fact, for fiscal year 2018, we expect average CPI inflation to be about 4.6%, which does leave some amount of room for rate cuts from the RBI. Having said that, at a time when global interest rates seem to be turning around and bottoming out from here, not just in the US, but across emerging markets as well, it's difficult to see long tenor yields in India come down dramatically. So the way we would expect things to play out is possibility of rate cuts, possibility that the liquidity overhangs brings down short-term rates. But the 10-year bond yield, I would think, would struggle to go below 6.35% or so. Even if it does, it will not probably sustain. I would expect it to, inch towards 6.5% and then actually head higher as we go along the rest of the year. FY18, we could even be in the 6.75-7% range.
Okay, that's very useful. Thank you very much, Ananth. Anuj here is has a large part of